it's not good enough. If you go back to March of 2018, when the tariff and trade talk escalated, the median stock among large, mid, small cap stocks is up about 5%. So the good marks the president gets for the stock market returns in the first half of his administration on tax cuts, regulatory sensibility, renewing entrepreneurial spirits, that's given way to uncertainty where tariffs have been, I think, the biggest overhang on stocks even moving higher.
Also, Michael, I know that you were at the speech and you probably caught that question, I believe, from the CEO of Hess, who asked about uncertainty, and the president said, what uncertainty are you talking about? And I'm wondering, Michael, if in your data you do see uncertainty, because it does seem that CapEx, for instance, at least from the earnings season we just got, and the data that we have seen a depressive impact on capital expenditures.
Right. So we certainly know that CapEx, capital equipment spending, has contracted in both the second and the third quarter. It looks like it may do so again in the fourth quarter. We can't say for certain that uncertainty is, or trade policy uncertainty is, the only cause or even the leading cause for that slowing in capital spending. But certainly that is one of the things that, we see in anecdotes from places like the Beige Book, which talk about a lot of businesses holding back on projects because of uncertainty about the trade policy environment. But as I said, you can't really distinguish with perfect precision what is caused by trade policy uncertainty versus what may be just slowing global growth or some slowing in profit growth. But certainly that does get highlighted in a lot of the surveys we look at.
Michael, who was in the room since you were there? Who were your fellow audience members, and what was the mood like? What was the reception like?
The audience, it was a couple thousand people, I think, so I don't know who everyone was. I know a few people I saw, a few friends there. The mood was good. I think the speech was peppered with some jokes, and people liked that. But the mood was fine. I don't know exactly who was entirely in the room, though.
So let me turn to you, David, and pick up on a couple of themes there.
Sure.
The president talked about how higher interest rates have put us at a competitive disadvantage globally. Do you feel that way? Do you feel we would be, and the stock market, as he said, would be 25 to 40%, I believe those were the numbers, higher than it is today, even if interest rates were lower than they are today, and maybe even at zero or below?
Tyler, the president, frankly, gets good marks on tax cuts and regulatory sensibility, in my view. He doesn't get good remarks or good grades on undue criticism of the Federal Reserve Board for saying we should have negative interest rates. Is there any U.S. investor or business person who would trade places with most of Europe and Japan who have lived with negative interest rates and the fallout of that because of a weak economy and weaker stock prices? There, frankly, the president loses me when he criticizes the Fed or talks about the virtues of negative interest rates. Our cost of capital is certainly very low for businesses to succeed and flourish and create profits for stock investors.
The corollary, though, Michael, is that lower interest rates, let's say lower instead of negative at this point, would mean also a weaker dollar, which could be beneficial to a lot of multinational companies in the stock market. I mean, how do you sort of parse out the correctness of the president's statement and sentiment versus saying negative interest rates would be bad for the U.S. economy?
Sure. So, one way we can think about this is to look at a variety of policy rules, things like the Taylor rule and so forth. And there are a number of those, and most of those suggest that policy rates in the neighborhood of where they are now is relatively appropriate. And I think most economists that I know think that rates, sure, maybe they could be 25 basis points lower, 25 basis points higher. I don't hear a lot of respected mainstream economists who think we really need to go much more stimulative, because we are already at full employment. We're pretty close to price stability, so as defined by the Federal Reserve. So policy seems to be in a good place. The economy is in a good place. It's not clear that we need either more restraint or more stimulus, I think, at least according to these more objective policy rules.
So the president should stay away from criticizing the Fed at this point, Michael?
I think an independent Fed is a good thing.
Oh, he should.
Okay.